Okay, good morning, everyone. Looking at the US stock markets, the Dow has again recovered from the 23,300 points level, forming the double bottom formation. Since then, the Dow has recovered towards the 25,000 psychological level, but we did not see any further gains beyond that. And subsequently, the Dow has pulled back. It formed a hammer candle along near the 23,300 points level, and the recovery on the confirmation of the hammer candle was noted on last Friday as the Dow rose about 332 points or 1.4% amid the strong jobs data. The unemployment rate on US in last month or April has fallen to 18 years low. So moving forward, we're expecting the Dow to see further upside being supported by the strong economic data and also the strong earnings results following the implementation of the tax cut. So moving forward, we're expecting the Dow to trend towards the 25,000 psychological level. That will be the key resistance for now. Beyond that, we could see further upside for the Dow to see a potential W-shaped formation of breakout towards the next resistance, which is located towards the 25,800 or even towards the 26,600 point all-time high level. In the meantime, the 23,300 points will serve as the immediate support for now. On a similar note, the S&P 500 has recovered from the double bottom formation along the 2550. It has recovered towards the 2700 psychological level, but we did not see any fall through buying interest, and instead the S&P 500 has retreated and formed the hammer candle on top of the 2600. And on last Friday, we did see the S&P 500, similar with Dow, has raked in some of the very strong gains, rising about 1.3%. So moving forward, we're expecting the S&P 500 to trend towards the 2700, and upon the breakout and a closing above that, further upside will be seen for the S&P 500 towards the 2800 psychological level or even towards the 2870 level. Some updates on the crude oil prices. The crude oil prices has again recovered from the $62 per barrel mark or the EMA 60 level. Since then, the crude oil prices has double top formation breakout along the 66 towards the $67 per barrel level, and since then, the crude oil prices continues to maintain its position above the EMA 20 level as well. And on last Friday, we did see the crude oil prices continues to trend higher to close just marginally below the $70 per barrel level, rising for the third consecutive trading day. Gains was underpinned by the potential sanction or new sanction from US against Iran. So should that materialize, we should expect the crude oil prices to firstly retest the 70, and upon that, further upside will be seen towards the 80 with your previous consolidation range of 66 towards the $67 per barrel level on the crude oil prices. All in all, crude oil prices is still forming the higher high and also the higher low from intact on the crude oil prices. Okay, some of this on the local front. The FMKLCI has again hit an all-time high level on the 19th of April. Since then, there's no follow-through buying interest, and instead, the FMKLCI has retreated towards the EMA 60. It staged just a 2 to 3 days of technical mild rebound towards the EMA 9 and also the EMA 20 level, but gains were short-lived and subsequently has retreated towards the 1840 level. So moving forward, we will monitoring for this 1840 level support level. Should this level were to be breached, then we will see further pullback on the FMKLCI towards the 1820 or even towards the 1800 psychological level, or any recovery from now will be just capped towards the 1880 on the FMKLCI. Given that the gains on Wall Street on last Friday and also the higher crude prices, we might see some of the bargain hunting activities following 3 consecutive days of pullback. Mild bargain hunting activities could kick in on the FMKLCI. On the low liners wise, the FM small cap index has recovered from the 13,700 points level. It staged a technical rebound towards the 15,200 points. Subsequently, the FM small cap index has pulled back and traded in a sideways manner over the past 2 weeks trading period. So moving forward, we might continue to monitor potential breakout above the 1,180. $15,200 points, might see consolidation from the 1,000 toward 180 points a level. Given that we are approaching the upcoming general election, let's move back towards the previous general election to see how the advance in GE13 or the previous general election. We did see that prior to the general election, we did see the advanced market index has seen some of the profit taking activities towards the May 120 level. It formed a hammer candle on the 3rd of May, and after on the general election on Monday itself, on the 6th of May, on the 5th of May, and on the 6th of May, we did see the lower earners has very, very strongly for the next 1 month trading period. So should the current party to remain in power, we might see similar to materialize on the FBAM small cap index. So should the current party to remain in power on Friday, if there's no public holiday, then we might see on the low earners to react very strongly towards the 15,180 and that further up to 900 points level. On stocks wise, some of the stocks that we can watch out for firstly will be Yinsen, given the cry prices has rallied very strongly. Pull back from the recent peak of 4 ringgit and 40 cents level towards the 3 ringgit and 66 cents. After hitting the 3 ringgit and 66 cents, we did see Yinsen has staged a mild recovery and traded on a sideways manner. But recently, we did see some of the higher volumes are being traded on Yinsen again. So for Yinsen, we'll be monitoring for this breakout above the 4 ringgit and 15 cents or 16 cents level. Upon the breakout of 4 ringgit and 16 cents, we can trade Yinsen towards the previous peak of 4 ringgit and 40 towards the 4 ringgit and 60 cents level. Your stop loss point, should there be a breakout 4 ringgit and 15, will be located towards the 3 ringgit 87 cents level for Yinsen. Should Yinsen see a breakout above the 4 ringgit and 15 cents level, you could also anticipate for the RSI to give us a rise above the 50 level, whereas the MACD indicator has already issued a buy signal on last Friday. And should Yinsen were to breach above the 4 ringgit and 15 cents, the up intact orientation should be re-established again. Some of the other stocks we can watch out for firstly will be 7May Construction. 7May Construction, as we mentioned on the 30th of April, we did see the bullish candle was being formed, and subsequently it just pulled back for the next 2 days of significant volumes. And on last Friday, we did see price has once again rebounded to close above the EMA 120 level with some of the high volumes being traded. So for Suncon, we're expecting price to firstly trend towards the previous peak of 234 cents. That will be the immediate target for now. And upon the breakout of 234, further upside will be seen towards the 252 or even towards the 264 level, with your stop loss point located below the 2 ringgit 8 cents on 7May Construction. On the construction company, we did see Muhiba has pulled back from the recent peak of 3 ringgit and 36 cents level towards the 2 ringgit 50 cents. It did form a heavy sell down on the 4th of April towards an intraday low of 2 ringgit and 50 cents, but on the next day itself, we recovered very strongly, recovered almost all the previous sessions losses and traded on a sideways manner since then over the next 1 month trading period. And for Muhiba, we did see that price has retested the 2 ringgit and 99 cents short-term consolidation level with some of the high volumes on last Friday. So for Muhiba, we're monitoring for the breakout above the 299. Upon the breakout of 299, we might see further upside towards the 319 or even towards the previous peak at 336. Your stop loss point will be packed below the 283 cents level on Muhiba. For MFLA, this should be just a technical rebound play because it's still on a downtrend of formation. The MA9 still below the 20 and 60 and 120. So MFLA has recovered from the 1 ringgit and 42 cents level. It staged a 3 to 4 day technical rebound towards the 1 ringgit and 75 cents. After hitting the 1 ringgit and 75 cents, we did see MFLA has pulled back without significant volumes during the pullback phase, and it traded on a sideways manner. But during this period of time, we did see some of the rising volumes being traded over the past 3 trading days. So for MFLA, we'll be monitoring for this short-term consolidation breakout above the 1 ringgit and 57 cents level. Upon the breakout of 1 ringgit and 57 cents, we can trade our MFLA towards the previous peak of 175 or even towards the 1 ringgit and 93 cents, 94 cents level. Your stop loss point will be located below the 1 ringgit and 42 cents on MFLA. Last two company for the day, firstly is MISC. MISC has been trading on a sideways manner over the past 1 to 1.5 months trading period after the recovery on top of the 6 ringgit and 73 cents. Price traded on a sideways manner with some of the high volumes being traded on MIC. So for MIC, what we need to do is we're going to monitor for this potential trend line breakout, which is above the last Friday's high of 7 ringgit and 16 cents. Upon this trend line breakout of 7 ringgit and 16 cents, we can trade MIC towards the first target price at 739 towards the 7 ringgit and 90 cents level. Your stop loss point, should there be a breakout above the 7 ringgit and 16 cents, will be located towards the 6 ringgit and 92 cents level for MIC. Last company for the day will be Penta Master. Penta Master has again restricted alongside with most of the technology stocks since the earlier part of the year, from the high of 3 ringgit and 13 cents towards the 1 ringgit and 70 cents level, which half is market cap. And since then, we did see Penta has staged a technical rebound towards the EMA 120. It rejected the EMA 120 and subsequently pulled back and traded on a sideways manner. But recently, we did see Penta has once again closed above the EMA 20 level after the short-term consolidation breakout above the 2 ringgit and 1 cents level, accompanied by some of the rising volumes over the past 3 to 4 trading days. Following the breakout above the 2 ringgit and 1 cent, we might see further technical recovery on Penta towards the 228, and upon the breakout of 228, further upside will be seen towards the 2 ringgit and 44 cents level. Your stop loss point will be located towards the 1 ringgit and 85 cents level. Should Penta stage a mild pullback for now, this will be a healthy pullback for us to accumulate before the next uptrend to resume. If you have any questions, you can put in the chat box and I'll reply you shortly. There's one question on end-to-end. End-to-end, earlier we did mention for this trend line breakout and subsequently price breach above the 90 cents level. It has hit the first target price of 97 cents towards the 1 ringgit and 2 cents level on yesterday. We did not see price close above the 1 ringgit and 2 cents. So for end-to-end, we might, over the short-term period, we might see some of the mild pullback towards the 97 cents level before the next uptrend to resume towards the 1 ringgit and 6 cents level for end-to-end. All in all, end-to-end is forming the higher high and also the higher low formation over the short-term trading period, implying that the uptrend is still intact on end-to-end. Any pullback for now will be a healthy one, given that price has rebounded from the 84 cents towards the 1 ringgit and 2 cents level. But if price cannot support above the 97 cents, then you have to take profit or cut loss immediately. There's one question on OCR. OCR has seen the pullback happens after the price has violated below the 50 and a half cents level. Subsequently, price continues to trend lower towards the intraday low of 39 cents. After hitting the 39 cents, we did see the bullish candle was being formed, and subsequently OCR has staged a 3-day rebound. So for OCR, we need to monitor for price to breach and close above the 45.5 cents. Only we can confirm that OCR could be on a technical recovery play towards the 50.5 cents. That will be the immediate target price for now. And upon that, further upside will be seen towards the 55.5 cents a level. But if price were to reject the 45.5 cents and reverse, then we might see further consolidation phase on OCR back towards the 41.5 cents or even towards the 39 cents level. M+, we did mention also on the 3rd of May. So for it following the breakout above the 35.5 cents level, earlier we did see M+ has hit the 41.5 cents. It rejected the 41.5 cents on the EMA 120 level, and subsequently price pullback and traded in a sideways manner. And on the 3rd of May, we did see price has experienced a short-term breakout above the 35.5 cents. So any pullback will be a healthy pullback for now towards the 35.5 cents before the next uptrend will resume towards the 41.5 cents or even towards the 44.5 cents level. Your stop loss point will be located towards the 32.5 cents level for M+. All in all, M+ is potentially forming the higher low and also the higher high formation, which this could be the new recovery trend on M+. For Unity, price has again staged a rally towards the 18 or 19 cents level, 88 cents level from the low of 57 cents. After hitting the 88 cents, price has subsequently pulled back just towards the 65 cents level and staged a 1-day recovery on last Friday. So for Unity, we need to monitor for price to breach and close above the 76 cents. Only we can confirm that Unity could be on a further recovery towards the 88 cents. But if price were to violate below the 65 cents, then we might see further downside towards the 57 cents level. Bear in mind that this counter is quite illiquid, so it's best to get out of the position or lock in our profit immediately if price hit your target price or fall below the support level. If you look at the weekly chart on this counter, we did see a good bullish candle was being formed on top of the EMA 120 towards the 88 cents, forming the double top formation. It subsequently pulled back without significant volumes during the pullback phase. And on last week itself, we did see the recovery was noted, given that on last Friday, we did see the Unity has seen the buying support. So this could be the short-term breakout, pullback, and the continuation pattern towards the 88 cents for Unity. If there's no further question, that will end the morning briefing for today. Thank you.